Hello everyone, and welcome back to the Property Frontline. Today I'm here again with Scott with our Market Watch series. Hi Scott.
Hi Debra. Hi everyone.
Today we're covering off the property market performance to the 30th of November. So what has the market done and where do we think the market will head in the next 4 to 6 weeks? We'll also review items that are influencing the market, and for our INFOCUS section this episode we'll be focusing on the pros and cons of buying in a holiday destination. So let's get started, and this is Market Watch. So as we normally do, we draw our data from the 3 main data centers, which is Cotality, PropTrack and SQM Research. So Scott, would you like to take us through the house price performance for Sydney, Melbourne, Brisbane and Adelaide?
Sure, Debra. Taking it away here, starting with Sydney, the king of all cities. Cotality, 0.4% growth rate there. PropTrack had Sydney at 0.3, pretty close, and SQM had quite a spike in its asking price data, up 1.5% for the month. Melbourne, sort of, I would say, the slow turtle this time, running a bit lower at 0.3% with Cotality. Same PropTrack and SQM had it growing at 0.5%. Then we have our rabbit market, Brisbane, spiking up at 1.8% on the Cotality numbers. Very hot. PropTrack was quite a bit slower at 0.6, and SQM had a very large increase in its numbers to 2.7%. Looks like a very strong month for Brisbane. And down to Adelaide.
A forward market, isn't it? Yeah, the 2.7.
Yeah, that's right, of course. And Adelaide, pretty good number out of Cotality there, 1.9%. PropTrack higher than Brisbane, 0.7%, and another little spike up, 3% in that SQM data. Interesting, something to watch, I guess. We'll hand it back to Debra to take us through Perth and our other capitals. Debra?
Okie. Thanks. So, yeah, Perth, Cotality has Perth at 2.4% for their sales price performance. PropTrack up 0.9%. Such a different number between those two. Then SQM really so asking prices for Perth negative 0.2. Unusual. Then Hobart, Cotality has performance at 0.9%, PropTrack 0.1%, and SQM forward prices, asking prices, down 1%. Then Darwin, performance been so literally hot up there. Cotality has Darwin at 2.1, PropTrack 0.2, and SQM, the forward marker, at 0.7%. Canberra has Cotality has that for 1.3%, PropTrack 0.7, and SQM 0.8. Nationally, let's not really talk about it. So yeah, these look like little outliers. Maybe Perth and Hobart, like they're taking a break, an early break, so there's not too much on the market. Who knows what's going on there? Your thoughts on that?
Yeah, I did look at the Perth number last month, and it was up, the SQM number. So I think there is a lot more volatility in Louis' data. I don't think anybody thinks Perth declined that month, so it would just be what's available for sale, at that point in time, I guess.
Yeah. Okay. All righty. Maybe the agents are taking a little holiday. Okay. So next, we've just looked at the performance data from a numerical perspective, but of course I need it from a visual perspective. So let's take a look at performance. So this is the change in percentage of house price sales prices. I know I just said that. All right. So the outlier here is Darwin. Still really going helpful letter there. Really small market. So don't know how long that will continue.
It is slowing a bit. You can see the curve is starting to flatten.
Yeah.
So it's probably the first sign of that it's hit its peak growth rate potentially.
Now, this is a month by month number, and it could just be an end of year slowdown, but let's wait and see. Yeah.
Could be, you're right.
And then we have that grouping of Brisbane, Adelaide, and Perth that, duking it out for high performance. And then Hobart, what's that? Hobart, Sydney. Hang on, I've got 4 down there, haven't I? I've got Sydney, Canberra, Hobart, and Melbourne. Yeah, all pretty much bunching together. So we'll talk about what's actually really happening because I have a theory. Okay, Scott, do you want to mention anything about the change in rental prices?
Mostly that we're seeing that smaller markets, Darwin and Hobart, with the large rental increases, as you can see. House rents up 6% there in Hobart, but up a whopping 8% in Darwin. So there certainly is a current housing shortage up in that Darwin market, being driven, I guess, by some larger projects taking off and workers moving to the area.
Yeah.
Looks like Brisbane and Perth were quite strong on the rents. You can still see they're running well above inflation, with rents 6 to 7%. It's almost like a resurgence of rents there where they kind of got very high, peaked out and seemed to flatten out, but they seem to be taking off again.
Yeah. Yeah.
So the rest really running at inflation, which is where we've been for a lot of the year. We had the large rent spikes earlier, and a lot of the markets are just hitting affordability limits on rents.
Yeah, does look like there's still mostly around the country a lot of price pressure on rents. Yeah. Oh well, let's see how we go. All right. So, what are the big impacts or big changes that have occurred that will impact the property market going forward? So, of course, this month we've, as expected, just had our second month of no RBA movement. So there was no Christmas miracle, and now there's strong thoughts for an increase. The next RBA meeting is the 3rd of February, and now we've just recently changed to monthly CPI. So the RBA will have much more nuanced information to be able to act upon whether they're going to change the rates. So the last monthly CPI, only the second one, will be, so it's calculated and ruled off at the end of a month, and then it's normally released in the first couple of weeks of the following month. But because of Christmas, we won't hear about the November result until the 7th of January. So it's almost like back to a quarter result. But anyway, they'll get it sorted. And yeah, a couple of other things, and I'll hand over to you, Scott. So just from all of the work Scott and I have done reviewing the forecasts, like we both keep saying that we're just really astonished about the positivity from all the forecasters about where they expect prices to head for 2026, and positive means up. one of the other changes that came out in the last couple of weeks, it was announced that they are actually starting on that fabled fast train, so between Sydney and Newcastle. So the fast train for Australia, we've always wanted it, but we've never had a population big enough for it. And the fast train is now taken over the waiting story that we had for the new Sydney International Airport. So that new airport opens next year, and that was like 40 years in the planning. And now we're waiting for this fast train, and it has been announced that they are commencing the works for the link between Sydney and Newcastle, and it will be ready in 15 years' time. So that'll go quick, you watch. But yeah, so something to think about. And that's why Scott is probably, skipping as he recounts some of his purchases for his clients, because Scott loves Morisset, don't you?
Yes, we do. The Central Coast jobs hub suburbs, of course.
Yeah. And so my forecast again is that it will be the year of the regionals. Scott, can you talk us about the last 2 points?
Sure. Just a bit of news out of USA Trump land. The U.S. Federal Reserve cut interest rates there, 1/4 point, 0.25%. Nothing too radical, although there were a few on the board who had voted for 0.5%. General feelings in the U.S. are that they're definitely going to get rate cuts in this coming year. So it's very different than the mentality here in Australia. And there's the potential appointment of a new head of the Federal Reserve. And that's almost certainly going to happen because Trump and his crew are not very keen on Jerome Powell. I think they want somebody they can push around a bit more. And there's going to be a lot of pressure on this new person to cut rates potentially faster than the data warrants. And that's just something to kind of keep your eye on, as if we see the U.S. pushing rates down and their inflation rate rising. That's not a good combination. But hope for the best at the moment and see what happens.
Yeah, and so potentially, if they start to go a little bit crazy with it, we can, potentially see a bit of destabilization of that huge, huge US market. And that's when it sort of sets off, the alarm bells around the world, doesn't it?
Yeah. And U.S. home prices have grown for about 10 years in a row now. So it would not surprise me if there is a pullback over there after such a long period of growth.
Oh, okay. All right. That's interesting. Okay. Yes. So now we're going to do a switcheroo. We are now going to look at a holiday. We're going to take a holiday focus.
Holiday time. Let's go, everyone. Stevie Wonder here.
Oh, okay. Stevie Wonder.
I can't read anything with glasses on, everyone. So they're non-prescriptive. I can drive though.
Oh well, yeah, lucky. Okay, so we're coming up to one of Australia's biggest holiday seasons. Not for me, but for a lot of other people. And so we want to discuss this fantastic topic of whether you should buy in a holiday location. So let's start off with a definition. Basically, we regard a holiday location as an area that is away from the main cities and main job hubs. It would typically be at least 2 to 3 hours away from a city, at where it has a massive uplift in population for maybe just a very short period of time. Usually these locations are primarily for recreation, And the features are they would have some key attractions like, the big banana or the big prawn, some good restaurants and types. Yeah, so it does range from the beach sites or cultural sites like Ayers Rock or seasonal locations like the ski resorts or
Mm-hmm.
even like tropical forests. I think we've all got the message, so I'll stop talking. But yeah, the aim of these locations is to provide a break from our busy lives. And as Scott has pointed out, these areas are more for pleasure rather than for investing. Is there anything else you would like to add to that?
I like the bit about memories, I think. I sort of think of holiday houses growing up, and this was in the US. We had a cabin out at a lake, and we went out there, and I have many fond memories being with my parents and siblings out at that holiday house. So that's kind of aspirationally, I think, what people have in their heads. On the
And
investment
this,
side of things, go ahead.
well, I was just going to say, and this will show like what my childhood was like. Did you get attacked by mosquitoes at the lake?
Oh yeah, the mozzies would have been terrible. We would have had to have fires all the time to keep them away. But you just put up with that sort of stuff.
Yeah. Anyway, no, I don't. And now I've probably interrupted your
Oh,
thought.
that's okay.
Your
Yeah,
thoughts.
just
Was
on
there
just
anything
on the
else?
investment purposes, I was just gonna say, um, you know, typically people are not so focused on the numbers on these purchases, although Deborah is going to give us a bit of a different spin, I think, here the next couple of slides on some new ways to think about holiday houses and how they might be more interesting from that perspective as well.
Yeah, but you're right. Yeah, people really would be going into buying these places, uh, even though like they might be paying a little bit more, but they won't be so much worried about, um, yeah, the performance. Normally, it's
Yep.
more about that pleasure aspect. Yeah.
Yep.
Okay. All right. So some examples. So yeah, when we were planning for this topic, I thought it was very, very interesting because like, should you buy into a weekender location? Well, the Gold Coast and the Sunshine Coast, even Byron, um, uh, Central Coast in New South Wales, a lot of places, those places now are like residential hubs. So, quite a few years ago, like people were buying beach shacks, a
Mm.
Coolangatta, and now they're like bajillion-dollar properties. So you
Yep.
would say, yeah, there is a case for buying in there. And I even had an example this week where I was sent a property that was tied to an apartment where these guys were selling apartments for between 8 to 18 million on the Gold Coast. Like, geez, unbelievable. It's almost
Yeah.
like New York or Miami or whatever. I
Mm.
mean, it's
Mm.
beautiful. But yeah. Anyway, so other examples: Hamilton Island. So it's an island. Yeah, like you have to be very careful about buying off the mainland. But yeah, other examples: so the Snowy, Jinbine, Thredbo, Mount Hotham, Cairns, and Port Douglas.
Mm.
Tasmania. Would you buy in Tasmania for a holiday location?
It's too far for me. It fails my test. I want to be to my holiday location in 4 hours. So I kind of doubt
Oh, yeah.
I'd buy anything further out than that.
Yeah. Yeah, so another one is Broome, Alice Springs, Bunbury, Warners Bay, like that used to be the weekender of all the lawyers that worked in Newcastle. Then you've got, Mornington Peninsula, and on around the country. So where are all these places? So typically the weekenders start out to be just 2 to 3 hours outside of the main cities. But of course the cities are now getting bigger. So now we're sort of like leapfrogging further north and further south. So if you're looking for the next big thing, certainly go to the hub and then look about 1 to 2 hours up or down, or, in circumference from those locations. And yeah, we were like talking about how Byron now is so expensive that already they've moved a little bit further down the coast. So there's locations that are now, really, really popular, but there's some, areas and things to be cautious of. But yeah, so there's definitely good opportunities like right across the country. Just really need to stick to the fundamentals when you're thinking about what to buy. So
if you could flip back to the map for a second, I'll just say a few things about a few locations. So out in Perth, interestingly, because we've spent quite a lot of time out there lately, north side suburbs like Yanchep and Two Rocks, geez, those were total, holiday places. And there's a train line that runs out to Yanchep. So, and there's job centers, shopping centers going in there. And those are great examples of where you can get that growth. The timing needs to be right. And that's where there wasn't a lot of growth out there for many, many years. But, that key infrastructure going in there has changed that. Probably on the south side, you could say that about Mandurah, and down south of Mandurah as well. Now, there was already a train line that went down to Mandurah, but just all of Perth is expanding outward, and those places that were 2 hours away and holiday type locations are becoming residential centers with lots of people wanting to live there. So just sort of an interesting example with a capital city there.
Yeah, and because Perth is expanding in the same way Brisbane expanded, so it's really expanded just along the coast. Like it's really expanding that way, not so much further back. Yeah, interesting. Yeah, and let's not even discuss South Australia. So move on.
Yeah. Well, back on to fundamentals.
Right. Yeah, fundamentals. So if I was buying in a holiday location, I really would be just going back to like the facts and figures to start off with. So what's demand like? What's the purchase price? What are the general rental returns? Look at infrastructure and employment diversity. And of course, for sure it's going to be seasonal, so you'd have to think about that. I would really make my decisions about whether the local government was good or bad. There's some that are just very, very bad. So it's just not worth it. And they will, they can ruin a purchase, a bad local government. So just make sure you check them out, understand the zoning and regulations, particularly if considering Airbnb. So recently, Queensland just introduced some licensing thing for Airbnb. So the governments are all trying to get control of that. But people are still doing very, very well with a good Airbnb purchase. Also, think about the personal reasons for buying. Like that is a fair enough reason. If you really, really love the area and it's affordable and, it's going to enhance your lifestyle, well, it's fine to buy it. But if you are looking to buy for, massive capital growth, it's not necessarily holiday location wouldn't be the first choice. Yeah, and then like another fundamental. So, would it be, this one was your one, Scott? Would it be income producing at the times where you wouldn't want to use the property? So, if you only want to go skiing twice a year, 2 weeks a year, would it be income producing at those other times? And like Threadbow and those sorts of places would be now, because now they've got like the summer walking tracks and spa weekends. Like they are trying to make it a year-round location. So, assess the area. But and this is another one of Scott's points. A holiday property is typically not the first property you would or probably should buy, because if you're using a property as an investment, you want it to really nail the capital growth and solid rental return, and that requires consistent tenants and things like that. Anything else you would like to add?
We didn't talk about this prior, but on the rental returns, just do your homework. Don't get caught out by taxes in particular. We do have some states like Victoria that have introduced, new vacant land taxes that can catch out a holiday house owner who hasn't had to pay that in the past. So all of a sudden, not only are you paying your normal land tax, which has gone up, but if the government introduces another extra land tax on the top, you might find yourself out $5,000, $6,000, $7,000 a year in extra costs. So certainly beware of that on any purchase you're going to make, and factor all of that into your numbers.
Yeah.
Good old Victoria's finding a way to pretty well tax everybody down there these days.
Oh yeah, they'll be taxing homeowners on the sale price soon anyway.
Yeah.
Blah blah blah. All right. So good opportunities. So if I was going to buy in a holiday location, I would start with the weekender idea. So look for areas that are about 1 to 2 hours drive, or these days 2 to 3 hours drive away from a main hub. So where's the nearest main base, and look a little bit north or south of there. So a good example is Port Stephens. So as I was saying before, people who lived in Sydney used to go to the Central Coast for the weekend. I used to do that. And now, of course, everything has really become like people are living on the Central Coast. And also Newcastle is such a great place to live. So Port Stephens is around about 2 hours from Newcastle, really great area. Have a reason for going to the location. So is there like some, new hotel that has opened up? And so like those people, a hotel chain opens up in an area, they've really done like some really good deep dive research, and so that would get my attention, and I would start looking into buying into a new, like near a new hotel chain or a new chain of the hotel. Of course, if you really love the area and you're thinking that you might buy the holiday home and eventually retire there, retire, or you have a particular sporting interest like grass skiing, and so that's a reason for buying. Consider purchasing close to really great key features. So is it close to town? Is it near the station? Is it near the chairlift? Look for some feature that will anchor the property and expand out the benefits of living there and potentially the capital growth. This is another one of Scott's. The new roads. So do you want to talk about that, Scott? Just
Newcastle probably an example up north of Newcastle is where we see the state government make a major commitment to bypasses, an expanded motorway. if you can cut 30 minutes drive to a destination from a capital city, it just dramatically increases the number of people that are going to go there. So people are often buying when those new roads are getting announced. Some of us will wait until they're under construction because we don't believe it till we see it. But often in a 2, 3, or 4 year period, the transport dramatically changes and that area becomes quite a hotspot.
Yeah, that's right. Point to remember, capital growth could be a very slow burn. So ensure you've got good rental returns or some, like you can afford to take the hit financially.
Yeah.
Another one of my tips would be always looking for property with opportunity. So an easy granny flat conversion or something, creative. Like there's some people who are buying big blocks of land out near Tamworth, and they're setting up yurts. So like, tents for glamping. And so, that it could be a new little business for some people. Really just limited by your own imagination. As long as you've got those fundamentals and a reason, do the numbers, and it could be a good way to go. Okay, so holiday location pros and cons. Remember that there will be, like, now that we've got the ability to have more flexible work arrangements, it is increasing the value of what we used to call holiday locations. So, people don't have to live in the city to go to work. So that does make a case for buying in a holiday location. But pros, it is quite similar to the regional comparison that we did, but a little bit different. So more affordable purchase prices. And we are talking very reasonable. Like sometimes you can buy into these places for 200, 300,000. The pros, good lifestyle, will be larger blocks and larger houses, dwellings. Seasonal higher rental yield, and there could be dual purpose options for using the property. Of course, the bad side is there will often be more limited infrastructure, like will it be a long way from a hospital? Got to consider that. Seasonal employment locally, so there will be a lot of volatility, real capital growth, so might still have some spikes and then maybe some dips or flatline. But the big tip is watch for the build out of views. So you might pay, you might be interested in a property that is one street away from the beach, and if the hotel chain comes in and builds right in front of you, there goes your view. So just be mindful of that. So really, as usual, just keep to the usual tips. Watch out for misleading data, so make sure you use trusted and reliable validated sources. Always conduct the financial pros and cons of what you buy and use criteria that's tailored to your requirements. What's right for you won't be right for the next person, so it's not like you can just copy what everybody else has done. If you would like some help, Scott is available to talk through some ideas and help find some like a good range of property. Is there anything you would like to say about what you're buying at the moment? No?
We're still doing some stuff up on the Sunshine Coast, close to a city center being built up at Aura. But, prices up there are, for most houses, are well over $1 million now. So that's a bit of a selective niche. We've got our first property we built in Melbourne completing this week. I know you haven't been too keen on Melbourne, Debra, but we have had a few investors, let's say, dabble their toes in the water there with some lower priced properties that really have been designed to limit land taxes and get into very nice new estates with a lot of infrastructure going in.
Yeah.
And even to the holiday locations, we're working on a duplex project up around Harvey Bay, which would kind of fit into this theme of, what a great holiday location that is to get up in there. But it's an area that's dramatically changes as well, and having, a lot of jobs and families moving up there now.
Yeah. Yeah. And there's a lot of other things that are happening that you can't share quite yet. But anyway, all right, that's good. So I can also provide help. We have our Buy Like a Genius service, which is our full end-to-end buying service where we'll help you nut out the strategy. We'll do the short listing, assess the properties, negotiate and purchase. So if you want to contact Scott or myself, the details will be in the description box. And if you like the video, make sure that you subscribe and give us a like so that you're notified when the next episode comes out. That will be in just a few weeks in January, where we will update the property market forecast and see whether any of the forecasters have adjusted their view for 2026. But in the meantime, you should check out the last episode we did where Scott and I did a deep dive on the SQM 2026 forecast. So that was the first very big property forecast for where prices will head, and included Louis Christopher's different scenarios. So, join us next time for lots more. So time to say goodbye. So thanks very much for watching, and we wish everybody a lovely couple of weeks and see everyone again soon.
Have a very Merry Christmas, everyone, and a Happy New Year. Be safe.
Yeah. Okay. Bye-bye.